All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for June 23rd, 2025. We are recording this at 7 p.m. Eastern Time, and this is episode number 482. My name is David Cosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen right now, but we might look at some other charts from our panel as well. So today I've arranged for Dave Landry and Dean Jenkins to join us as our expert panel. And the option professor is back to moderate, so I'm going to turn it over to him.
All right, we got D and D, Dave and Dean here tonight, so we got a lot to talk about. Markets are going pretty good. We had a ceasefire announcement, and of course, the people that are at war didn't make the announcement. We'll have to see exactly what happens tomorrow. Right now, we got on our screen the S&P 500, and obviously, it's had a very big run up from the April 145% tariffs, but it definitely has stalled out up here. So we're going to try to toss around exactly, is this a stall before a go fill the gaps down there at 5,700, or is this a stall before we blow out the highs? So without further ado, Dean is going to start us out. And Dean, give us your views on what do you think's happening here?
Yeah, and I just have to share because I'm so pleased with the headline and the graphic that I came up with. So let me on my I did a Substack post yesterday, right? I got a Substack. Let me see if I can size that. So hopefully you can see that, and that's my graphic for the Substack post, right? Bombshell headlines, shrug-worthy moves, right? And the little, the headline like CNBC with, oh, the Dow slides, and it was down 0.35%. Right.
Yeah, yeah, yeah.
So there I am rolling my eyes. So
Uh-huh.
so uh so hey, and I said I thought it was a good statement, right? Um the story absolutely matters, right? The actual move, typical, overnight back and forth, right? But the news is obviously important, and I run a live trading room in the mornings, and we talk about the market and about events, and it's really hard um, because I think most people tune in here for a market update, not, for us to be the view or the five. Right. And so try to find that line of hey, we got to acknowledge geopolitical events because they affect the market, but we're not here to opine on them other than how's the market going to react, right? And so in terms of how the market's going to react, I, I think it depends because I do think, if you just kind of game out and go, so what are the good things, in the near term, pick, 30, 60 days. What are the really, really good things for the market that could happen? Right. Well, the Fed's talking about a rate cut in July. Some of the Fed members are, so that would be well received. I don't think that sparks a massive rally. Um, the U.S. and China have agreed in principle on, trade terms. It hasn't been signed yet. But it seems like, the tariff and the trade situation, it doesn't seem like there's any major breakthroughs on the horizon. And then, in mid-July, we kick off the next quarter's earnings. And we'll see if there's any, you know, bleed through from the initial tariff shocks, right? There weren't last quarter. So my whole point there is the it doesn't look like there's anything dramatic to the upside. We could continue to drift up. We could even take out the high. We're not that very far from it. But then there are some potential uh, downsides, right? If you just play out, what could possibly happen, if Iran, it has the ability to activate sleeper cells and, Europe or here, and there's a big cyber attack that has an impact, or, heaven forbid, some act of violence, that the possibility lingers. And then, you know, Russia, China, do they do something that makes us unhappy in terms of an alliance with Iran. It just feels like maybe the downside has a big, potential bigger reaction than the upside is the, and so, I think we got some good strength. The market shook off the news over the weekend, and even the the half-baked, couple missiles over Qatar. The market actually rallied and goes, that all you got? Um, so it could drift up, it could actually take out the high, but I don't see any catalyst in this near term, 30, 60 days, even within a few weeks for a major rally. Could be wrong. There are potential things that could happen that could trigger a sell-off. So I think we just watch close. And I think right before we went live, Dave was talking about a day trade or aftermarket, short-term trade he was in and had a tight stop. And yeah, I was actually talking about that on my in my live session this morning. And a couple people said, yeah, given the volatility, I'm running my stops pretty tight. And I offered the thought that in times of viability or volatility, my approach is to run with a little bit wider stops, which with my math implies a smaller position size because, the distance between the entry and the stop helps determine my position size. So I'm going to go a little bit wider stop, which implies a smaller position size if we know we have a period of somewhat, higher than normal volatility. I want to account for that. The worst thing is, it's like, okay, we got a good trend. I'm going to get into the trend. And then you get stopped out and the trend actually does go the way you thought. And so you were right and you lost money. And that,
I actually agree with you. The reason I had a tight stop was I was looking to exit on the close, and I just put in a tight trailing stop to get me out of the
yeah,
position. But
that's a,
earlier today, I took a trade at GE. I had it on my watch list for today, the one that I make public in my trading service. And I was looking at it, and it's a pattern I call a Russian doll, where you have a daily setup and you get in intraday. And I actually went in with too tight a stop, got knocked out, and then I went back in, smaller share size and bigger stop, and I was able to ride it the rest of the day. So yeah, I fully agree with you. I just real quick, and I'll let you keep going. But I recently republished and freshened up an article. You just talked about Substack. I put mine on Substack too, called "The Myth of Tight Stops," and that's because
Yeah.
the people always a tight stop seems to be universally preached, but you'll actually catch more winners. And I've actually fixed, so to speak, a lot of people just by having them loosen their stops up. And then once they catch a few of those elusive outliers, then they tend to start doing really well once you catch a couple of trends. So anyway, I didn't mean to cut you
real
off.
quick,
I
real
agree with you.
quick, Dave, on the GE deal, I see that for some unknown reason, because I have a purple on my 120-minute graph. I got
Yeah.
a 200, 120 moving average that the thing was just totally holding. And then for some reason, for about a minute or so, it went down to 232, then got right back above 236 and went all the way to 237. So it's a classic case of, sometimes when these moving averages are pointing in a direction and they get violated, you got to ignore it. Because
Gotcha.
unless the averages are pointing in the direction of which they're stopping you out, it's probably stopping you out before they go the way you know it's going to go.
Yeah. Yeah.
And that GE is a perfect example because this thing had no reason, none, to go from 236 to 232 for like whatever it was, a half a day or something, and then go right to where the trend was and end up $10 higher, which is where it should have been, and they closed right on the high today.
If I don't know I don't know how we're taking turns today, but I could share my chart real quick and show you what I was looking at if you guys want me to do that.
Yeah, we'll do that, and then we'll bounce back to Dean.
All right.
while you're setting up there, I want to follow that thread all the way down on the risk management because
Sure, sure.
I preach, before you do anything else, before you load a chart, or apply an indicator or take a trade for sure, right? Get your risk management strategy figured out. Um, and so that's interesting. You referenced an article, the myth of tight stops, and one of the other myths that I've encountered that I use as a kind of a what not to do example, I guess, I run into a lot of traders who trade with a fixed trade size and
Yeah.
a fixed percent stop loss. Go, okay, I'm gonna take $500 positions, and if it's down 100, I'm out.
Yeah.
And I said, well, man, that's kind of like driving down the road and go at exactly 1 mile, I'm gonna take a hard left,
Regardless.
That's a
regardless.
good analogy.
And so the math. I learned the math from Bennett McDowell, and he got it from Nazar Al-Sara. And it's that simple. You go, okay, what's your percent, right? Okay, I'm not going to lose more than 2% on any given trade. Okay, right. A $10,000 account, that's $200. So for my entry or my stop, what's 200? Okay, and then that determines the position size, and you limit that, right? You don't put half your account into one trade,
Yeah.
and then and you set your stops at um, you know, moving averages, reversals, support areas, like legitimate objective areas. Hey, I got an uptrend, right, that has a series of, higher highs, higher lows. The higher lows are support areas. Let me go a tick or two below those. If it's violated, the trend is probably failing, so I want out of the trade. So you know, that's my thought process, and that's my riff on it.
Yeah,
That sounds
and that's
good.
good. It's a good idea not to like what at the end of the day, what you're saying is don't nothing's made out of concrete in these markets, and neither should your stops.
That's right. And again, a more volatile market, I just run a wider stop, or
Yeah,
look for, and in a trend, you're going to have major support areas, double, triple bottoms or bigger reversals, move to the stronger support area for the stop level and give it a
yeah,
little room to breathe. Yeah.
Yeah. Where would
makes
you be
sense.
wrong? And I'm going to swing to intermediate term trader, but I'll occasionally hold positions for years if it moves in my favor. But you have to at least ride out the short term volatility of the market, and then you can slowly adjust to the longer term. And I'm taking partial profits off at an IPT.
And
This is
just to
go ahead.
finish that thought, so I think we're in very, very close alignment because, in a winning trade, right, I'll take partial profit, right, to just reduce risk and lock it in, and then begin tightening a trailing stop, right?
Mhm.
I'll do just the opposite on the trailing stop. I'll actually start to loosen it up to make the transition from a short term trader to a longer term trader, and I'll show you an example of that in just 1 second. You want me to jump into that GE trade real
Yeah,
quick?
yeah. This is the GA deal. So I see the GE deal, and like I say, it violated your average, but that was like a false break
Well, that's actually
violation.
the
Yeah.
30 EMA in this particular case, and this was a setup for a swing to intermediate term trade,
Hmm.
and I just happened to see it rallying today, and I liked it. And if this indicator down below, or as I often call them, illustrator, this is just Landry light. This is available, and it's just it counts the number of bars where the low is greater than the moving average, or the high is less than moving average. And I'll pull up the S&P in just 1 second to show you. And this is what I call a Landry light pullback. I used to call it kiss my goodbye. And I used to use the 20 EMA. I'm using the 30 EMA now. And I actually use a blank chart more often than not, but the 30 EMA and then the bow tie moving averages, which is 3 moving averages, 10 simple, 20 exponential, 30 exponential. I will occasionally use those in different cases. But the great thing about the 30 is if you pay careful attention to it, it could really help to keep you on the right side of the market, especially if you pay attention to the Landry light. Now, this does not measure magnitude. It's just a number of days, because you can see right here, the market starts pulling back to that moving average. And you can see these numbers down here continue to climb. So we had about 40 days, or exactly 40 days of that upside Landry light. And then it goes to zero when it gives that moving average a kiss. Now, I don't necessarily always wait for it to go all the way to the moving average, especially if something's really taken off. But every now and then, something can set up like this quite nicely. And you can see this is a very persistent trend. It tends to go up day after day after day after day. And the correction was fairly orderly down to the 30 EMA. Anyway, I saw it rallying earlier today, and I went ahead and took a day trade on that. I usually don't, or at least I preach not to take day trades. I probably take more than I admit or should. But what I like to do, getting to the talk about stops and all, you can see this is a pullback here. This is a gold stock, and it's a little wide and loose, but I will take gold in commodity related stocks that are slightly more wide and loose. The GE, just real quick, notice the persistency again. Notice how it just kind of went up and up and up and up and up. And then the gold stocks are going to be a little bit more wide and loose. But once again, you had to pull back here. I'm not too worried about a gap in something like a gold, but we triggered in right here, and then it took off and then it came all the way back in. But we weren't stopped out because we had a fairly liberal stop on this to again ride up that short-term volatility. And then we had initial profit target up here. I forget the exact number, but somewhere in the 24-ish range. And that was hit. And now when that happens, the stop goes to break even intraday on the remainder. And then we'll let that stock stop slowly loosen up over time. And a lot of times you're not just doing it. You do that by not doing anything. So this is one of the position trades. I'll show you one more real quick. The only other one we're currently long. We're long 2 golds right now. That one hit the IPT. This one has not just yet. But you can see that it pulled back the moving average back here. It took off nicely. Let me see. I think we got in right here, though. Let me take that back. Yeah, we got in right here on this bar here. And that's a pattern. I call it double top knockout. It's also the pullback to the moving average, the kiss the my goodbye pattern, or Landry-like pullback, as I now call them. And so far, it's rallied up. And 16.5, if memory serves, is the IPT on that. So we haven't quite gotten there just yet. And the stop has trailed up a little bit, but not much. But anyway, that's the ones that show. And you guys want to get into the market, or what do you want to do? Jim, are you lead today, or what's going on? Because I could pull up the P's if you want.
Yeah. Let's take a look at that. I think
Okay.
I'm good.
So S&P 500. Now I'm not too. It's not that I don't worry about the news or think about the news, but I try to just be a price purist as much as I can. And I often tell a story where I was showing a bunch of short gold stocks, and some guy in the back of the classroom blurts out, what about the situation in Nigeria? And I'm like, what about the situation in Nigeria? And he starts to tell me, and I was kind of being rhetorical with him. Anyway, in the gold stocks that we were short actually worked out nicely. And I think you can get into a lot of trouble chasing the news because you never know. First of all, you don't know what's going to happen, and a lot of things could happen. And then second, as you guys know, a lot of times the reaction is just the opposite of what should be. If you'd have told me we bombed Iran, I was waiting for the futures to be down 100 points or whatever Sunday night, and they weren't, obviously. But anyway, getting to the S&P 500, we have lost some steam as of late. And one of the simplest things you could do is just look at the net price change, and you could see that we're just kind of about where we were a few weeks ago, and today's rally makes it look a lot better. Now, when you're at an inflection point like this, closing in on those all-time highs and bumping up against a little bit of that overhead supply like we are, a down day is going to look kind of ugly, and an up day is going to look pretty good. So you got to be careful not to get too excited one way or the other. But we've had really good upside Landry light for quite some time, 38 bars of upside Landry light. So we haven't touched that 30 EMA in a long time. And on the downside, you could see that it was really nice, and it kind of went up and just kind of almost kissed that moving average. And again, that's a setup in and of itself. And then it rolled back over. And then obviously we've had a decent rally since. So something like this, so simple, can really help to keep you on the right side of the market. And when it's oscillating back and forth between up and down, green and red, like it is over here, look at the chart, you can see we're just chopping sideways. So that's a market as a trend follower. You got to be really careful to jump in midstream. But S&P 500, for the most part, looking pretty good. I'd like to see us get through that overhead supply without getting into a lot of details. If you just pull up a lot of areas like mags, for instance, you can see tons and tons of overhead supply. And my version of technical analysis is looking at the charts to try to figure out what the players have done and what they likely might do. In other words, try to read that psychology of the market at the same time, keeping my own emotions in check, accepting them and embracing them, because you can't, from a neurological standpoint, eliminate emotions. But anyway, lots of people likely bought somewhere in this range, and they might be looking to get out at break even. And there's a lot of sectors that still look like this, financials to some extent. Semiconductors are just kind of getting through a lot of that overhead supply. So far, so good there. But they still have a little ways to go. And so that's one thing I'd pay attention to, like your robotics and AI, lots of overhead supply to deal with. So that's That's the downside of the market. There's a lot of negative out there, but on the plus side, so far overall, it's climbed the wall of worry.
There's no doubt about that. And the thing I was trying to talk to Dean about is I think it's going to make a decision here, and it's going to make a decision to blow out this 6,100 area, or it's going to go down and get those that gap filled. And right now, there's no evidence of it going to go fill that gap at 5,700. That's why, selling this thing without any moving averages pointing down is a difficult thing to do. Today, they brought it down to 5960 area, and it looked like it might be going down on a short-term basis. And then it got a bid and rallied all the way up above all the averages again. So the sell side has been a rough racket. In the first quarter, they underestimated earnings. It was up 13%. They're only looking for a 2 to 3 or 4% increase in earnings. If they came out at 10 or 15% again, I mean, this market is not priced for that. And that's why this market is, very binary right now, in that if they beat the earnings, came out like that, there'd be a lot of reasons to come in. And that trend, this doesn't seem to be pointing down. So it's kind of rough to make money on the sell side, unless you bought puts on HIMS right before they announced that they're breaking up with Novo. Then it'd be an easy way to make money on the downside. But Dean, going back to you, is there any sector that you are looking at a little bit? Because we do have the banks start out the season July 15th, and it's going to be July 1 before you know it. So do you see any sectors going into earnings season that you might want to focus on?
Yeah, I mean, this morning energy looked good.
Yeah.
And by the close, it did not.
Well, it has a lot of problem at $77 on the crude, and so if it can't get through there, the next thing is go right back down to 62 or 65, and that seems to be what it's looking like it might do. But you never know. Like you say, it's a news-driven thing.
Yeah,
Those energy stocks at a pop. Did you try to participate in that little pop that we've had in the energy shares?
no, it was,
No.
it was a little too short-lived and
Yeah.
um and a little, there just wasn't a setup for me, right?
Yeah.
And there's so much overhead supply, and they're just kind of all over the place. Jim, I think the only sector I was kind of thinking in my mind, the only sector that comes to mind that's really blowing and going will be defense. And that's, I know I'm confusing the issue with facts, which I say not to do, but it so far so good. It's
Well,
more
I
defense
was
is
gonna
concerned.
I was gonna move from energy to defense, and that's in my Substack newsletter. Um, and you don't just go buy. It's like, wow, everybody's shooting rockets, and they got to buy more. Um, something like that. The news should draw your attention, and then you look at charts, right?
Yeah,
Yeah.
I agree.
Raytheon's had a great run. RTX. Yeah.
Yeah. But it is a true statement. They're shooting a lot of rockets, and presumably
Well, one thing I say, hold that thought, Dean. I'm sorry. One thing I say a lot of times is don't search out themes, but let themes find you. And obviously, the defense stocks are rallying, so maybe there's something worthwhile there. That's got GE on my radar, obviously, and now RTX, of course. Now we're looking at this. This is not a bad looking chart. So again, let the theme find you as opposed to, because I think if you try to create the theme first, you're going to probably hit 1 in 1,000. But if you let the charts help you find the theme, you'll do a lot better.
Yeah, I teach, a module of my training on scanning, and I I like to do, there's several approaches to scanning, and some are just purely indicator based. There's a whole approach, right? But one of the approaches is, it is kind of sector based, and it's go, form a thesis, but a thesis is then either proven or disproven, right? But a thesis of, hey, everybody's shooting rockets, and they probably need to replace them. Let's go look at who makes rockets. That's a thesis, right? And then you go, hey, let's pull up 5 candidates, look at the charts, and man, nothing here. And that, what'd that take? 5, 10 minutes?
Yeah.
So,
Yeah. Well, how about something like this, Dean? They got stable coins passed with this Genius Act, and PayPal has a relationship with Coinbase, and they also have their own stable coin already for settlement. So let's look at a stock PYPL and see if you guys see any type of a situation where, as the news unfolds on the stable coin, is this something that's going to go through the roof and fill that gap, which is something I think is extremely possible.
You know,
And that's thematic, right?
yeah, and we actually traded PayPal in mid-April, and that was purely a technical move. And actually, I've been using uh, AI to help find stocks. I've curated some queries, right, that I run periodically to surface trade ideas. You know, there's no way I'm hooking my account up to a bot, right? But I use it to filter things, and it actually found PayPal. Um, and in mid-April, and we caught that move up, right, to mid-March, or yeah, mid-March, or May, May. So, you know, I was gonna get my commentary. You know, the whole stablecoin PayPal thing. You know, I don't know. I don't know enough about those moving parts, to make any kind of um, market company strength, fundamental, kind of forecast. I'm primarily, I know what PayPal does. I know what Raytheon does. I know what Chewy does, at a high level. And then I'm a technical trader. We've found the best um, candidates over the last, like, say, 4 months has been individual stocks, and there's a lot of you sort through a lot of straw, right? And then it's just like, wow, this is technical, and it doesn't seem to be affected by the developments,
Yeah.
and it's doing well. Like SoFi
Okay.
is one
Throw
we're
that up
in.
there because I've liked that myself, and it seems to be gaining some steam.
Yeah,
Yeah.
yeah.
Yeah,
And
I'd
so
like to see a little more. I'd like to see a little bit more momentum with this one, and I'd like to see it get past these prior highs. Like that PayPal's kind of like at mid level. I'd probably be less inclined to go after something like that. But this SoFi, if we could take out those recent highs, then I might start thinking about,
And so,
and everything is
we've been in
set up
this a
based.
while, and what I
Yeah,
like is that prior run up and the retracement. And then find support, start up, prove a new leg to the trend.
Yeah.
So
Trending. Yeah.
right about where it crossed your, I think you said that's the 30 EMA,
yeah,
right? That's where we kind of like an entry on a chart like this. Had a big run, had a pretty orderly retracement. Now the next wave is starting, right? So yeah, it's a little late to jump into this now until it does clear the prior highs. But
yeah.
yeah, we caught it there, and
And it'll have its earnings in July, probably with the other banks. And if they come out with some good guidance as far as, I think they're very friendly to the crypto crowd, right?
um,
Robinhood's just been a big winner for me because I think it's the crypto crowd is just migrating over there in droves.
Yeah, that's a much better looking trend. That's been on my radar
Yeah.
too. I keep a
It's
momentum
a
list.
no-brainer.
I don't
Yeah.
actually trade it, but it's I've experimented with trading it a little bit, but for the most part, it's just a proof of concept and to get these stocks on my radar, regardless of what sector they're in. And right now, we've got a bunch of golds and all. But anyway, it's 100 stocks, and Robinhood's definitely one of them. And the only criteria is that the stock has to make a brand new 52-week high to make the list. And I call it down as uh, relative strength pushes out some of the weaker ones or stronger ones are added in. And it's really been a great thing to kind of see where the money's flowing, see where the cash is flowing and all. And I've been really happy. Just to show you real quick. So this is it right here. And it's been really a cool thing to do to kind of see where the money's flowing and everything else. And you can see the metals are a big hunk at 11%, and then the gold's on top of that. It's another four. That would be 14%. And the fence is getting bigger and bigger, obviously, given the market. But there's a lot of sectors you would never even think about going after, but they're banging out new highs. And as I think Dean was saying earlier, or it might have been Jim, defying gravity in spite of the situation. So that's kind of kind of an interesting thing that's happening. But definitely these the crypto started to. I put Robinhood as crypto as far as
Absolutely.
the way it's
Yeah.
seen. I agree on
Yeah.
that. But
What
yeah,
about you were talking about metals, Dave? What are you thinking about Freeport McMoran? We've got a massive squeeze. I mean, I heard there's only like 1 week of supply at the LME for copper and
what's the symbol of
FCX.
Freeport?
Yeah, Frank Charlie X-ray.
Oh, used to be something different, I think. Yeah, that's improving. There's nothing for me to get too excited just yet about that, but it's certainly working its way higher. And again, when it comes to metals and mining, I have to be a little bit more lenient because they do tend to chop around a little bit. Uh, it's just kind of a little wide and loose. There are any of the copper plays out there that you could think of?
SSC, Southern Copper.
Yeah, Southern Copper. Oops, SSC. Is that the right
Is it
symbol?
SS? I thought it was SSC, Southern something Copper. SCCO. SCCO. There you go.
There it is. These symbols change.
Yeah, well, XYZ is now blocked,
Yeah, isn't that crazy?
Mhm.
Yeah, I mean, this is definitely improving, bottoming out, but it's a little wide and loose and hard to get excited about. I'm more excited about, and they're not set up but like the rare earths at this moment. Like, take a look at uranium overall, this global uranium ETF. And
Yeah,
that's a good looking chart, and that's a trending
sure.
chart there. And we've gotten past all the prior peaks, and then it's had a pretty good run. I didn't mean to hijack your copper comment because it's kind of interesting what you're saying about the copper supplies and
Well, you're
all.
showing things that have already happened for sure, and I was trying to look for
Oh,
something that might be developing because when you're
oh,
an option player and you're a buyer, you have to buy things before they happen a little bit. Otherwise, if I start buying calls on this thing now, I'll be paying a fortune, and even if it goes up, I might not make money because the premiums are so fat. Do you know what I mean?
yeah. I used
Here's
to. I
a
was
here's a here's a watch for you, Jim. One I'm
All
watching.
right, what do you got?
Rivian.
RBM.
Oh yeah,
R
because I think it's definitely getting some market share.
RIVN.
Oh,
Yeah,
Rivian.
people love
Yeah,
that people love that SUV compared to the one that looks like a dumpster that Tesla has.
So if you look at it had a big pop up to almost $18,
Yeah,
right? Had a nice retracement. Now it's consolidating, right? The last, right?
yeah,
And I've actually got a trigger, you know, kind of just above that gold line that Dave has, right? That could be, if it breaks out of this current consolidation, that could be the indication of, at least going back up to those, uh, at 1775 high, which, that'd be from 1415 to 1775 is a
yeah,
$3.50 move, right? That's like 30%. And I like these lower priced ones that still trade with tremendous liquidity like this, right? This one traded 22 million shares today.
yeah.
Um,
And
because you
there's
could,
I got two moving averages come in at 13, the 120 and the 250. So that's not going to be easy to get through. And so I'm sure the calls are pretty cheap, and it's only 60 cents away from the massive support. So I definitely would take a look at this thing, and I'm sure the options are probably pretty reasonable because it
well, that's the
hasn't been
thing.
going nuts lately.
You can go buy a shopping cart full of contracts, and then you have tremendous flexibility in your scale out and whatever, right? And
Yeah, for like going out till August 15th, they want $1.25 to buy it at 14, 35 cents out of the money. That sounds pretty cheap to me.
yeah. Why would you buy the underlying if you can get it for that? That's a good point.
That's it. That's my whole theory on any of this stuff.
well,
Because
You know,
if you're making 5% interest on your savings and you've got a ton of savings, you got some cash to work with, and you use these limited risk options to get in when you think it's a good time. And if it is, fine. If it's not, it's not going to cost much.
and
the
this is
years
one where I
ago,
I like a back ratio call spread, right? Because you can get into it for just about free. The max loss,
You're talking about on Rivian.
yeah.
Well, give
are
us an
you,
example of the strikes and the premiums just to get an idea to flavor on how that thing works, because most people probably are not that familiar with it.
I gotta set it up. Give
well,
me,
Yeah,
while he's doing that, Jim,
sure.
you made me think earlier. I spent 14 years as the sole technical analyst for a hedge fund that traded options exclusively.
Right.
And the question would be like, where's the market headed? And I'd say up. It's like, well, how far it's going to go? I'm like, well, I don't know. 10 points. Well, how long is that going to take? So
Yeah.
if you could get your timing and your direction and your volatility right, then you could trade options.
Oh, there's no doubt about it.
Yeah.
And like I say, it's kind of like those guys in The Big Short. They made their fortune because they bought options on things that people thought would never happen. When they were wrong, they lost the premium. When they were right, they made a ton. So
Yeah.
the key is like anything else, you have to do risk management. You have to, diversify a bit and, stuff like that. But, clearly there's a lot of stuff. If you want to just throw a couple up there that I've been looking at. Keysight, Keys. It's a stock they're both of these, this and Twilio. It looks to me like it's possible this thing could go on a nice big run. And it's right on the support. So, the premiums are dirt. And so if the premiums are dirt, and like I say, if it breaks the support, you don't have to let the premium go to zero. You know?
Yeah.
So it's a good place to take a stab. Another one is Twilio, TWLO.
That's a blast from the past.
Yeah. People forget these things, but you know
Yeah.
what? That thing is ready to fly. And for a dollar or two, and if it goes up and fills that gap, that's why we play the game. But you know what I'm trying to say is I have to look for things that look like that more than I have to look for things that have already gone up like Hood. I mean, I
I
was
got you.
interested in Hood at 50. I'm not
Yeah.
interested at 79,
Yeah. Well, I
because my,
have,
my game is to buy low and sell high as far as the premiums are concerned. And you can't do that if you're buying,
if it's obvious. Yeah.
that Soto guy for the Mets after he's left the Dominican Republic. You know what
Yeah. I got you.
I mean? We got to
Yeah.
get
It's two
him while
different,
he's
two
in high
different
school.
approaches. Two different approaches.
Well,
Yeah.
and you can do more than one.
Yeah. I
Yeah, I
agree.
mean, I don't have one approach for all my money. This is the
Yeah.
approach I use for this money, you know?
Gotcha.
Yeah. But yeah, you're right. Yeah, there's a lot of different approaches. And like I said, I think the smart way to invest is to try to maybe diversify through a number of approaches. So, maybe the one approach doesn't kick in, but the other one does, kind of thing.
Jim, are you looking at HV to IV on these things?
Oh, the implied volatility and historical. I would
Yeah.
just basically look at the implied. And to be honest with you, after decades of doing it, I don't really need any formula. I can eyeball the thing. I can
Yeah.
eyeball my charts and my moving averages and
Yeah.
my relative strength, and I can come up with a pretty good conclusion. In other words, I know when they're fat and I know when they're skinny,
Yeah. And it's like, and
which is
you
what
look at
IV and
an
HV are trying to
option and
tell
you're
you, right?
thinking, you look at an option, you're thinking
But
like,
not everybody's done it for 30 years. So,
yeah, no, I
obviously
hear
they would
you.
probably rely more on those kind of like
Gotcha.
RSI I look at, but only to give me an idea if we're near an acceleration phase, because the acceleration phase is where the money's made in options. So,
One thing that
getting above 60 on the RSI is very good for me if I'm in the calls. If I'm in the puts, if it's breaking under 40, that's very good for me, because those are the price points where you can get an acceleration. And that's when
gotcha.
options go from like a Boeing, a $4 call or a $3 call at 170, and it accelerates up to 210. That's the kind of large capital gain you're searching for when you're buying options.
One thing I asked myself when I
But Dean was
before,
going to show us a little bit about this
oh yeah,
strategy that he was talking about,
yeah, which
Yeah,
was
I got
on
it. I got
I
it set
think I'm
up.
familiar with, but certainly
Rivian.
I wouldn't mind seeing the math.
Okay. So, I think David or somebody's got to let me.
Oh, you want,
You
okay.
should be able to share now. Yeah.
Okay. All right. So, uh, you guys see it now?
Yeah.
Okay. Here's the Rivian chart. And I said, my target would be, hey, this prior high somewhere ish, and it could pop higher, right? So, keep that in mind. So I drew a red line. So
Yeah.
a back ratio call spread is you sell one, buy two, and one helps pay for the position, right? So you go further out of the money on the long, closer to the money on the short. So this is my short strike one contract. This is my long strike two contracts, and here's what it looks like, right? I'm selling one, 13. This is the August 15th, right? And then I'm buying two of the 15s. And then so this is I'm gonna get it for free, right? Actually, I get $1 in credit to get the position. Now, if it drops, right, and I get assigned on the short and I got to buy the long to cover it, the max I'm gonna lose is $199, right? So This one is an okay example, but this is the line that should get everybody's attention, right? What's the max profit?
Yeah.
It's infinite,
Yeah.
right? Infinite's a good word if it's on
Hmm.
that line. If it's on this line, that's a terrible thing, right? So and if it just keeps cooking sideways, it's going to expire worthless and you lost nothing, right? If it breaks out, right, you can make $1,000 on this. So
Yeah.
that's
So
a pretty good,
dead in the water is not going to cost you much. Getting
right?
assigned a stock, a couple $100, and if it
Right.
takes off like a bat out of heck, you got some good gain coming your way.
I kind of like that, right?
Yeah. No, it's not a bad thing. It's not a bad
Yeah.
thing.
So that,
Well, bigger picture, it's kind of cup and handly looking, a little wide and loose for my taste, but I can't argue it. It's sort of bottomed out there. I
yeah.
mean, it
And
looks like
again,
a
my
2 point
trigger,
pop was nothing.
I'm not going to go in, I might do this back ratio call, but just to take a long position, it has to break out for me, right?
Does
Then
the math on these work with, shall we say, higher price stocks and larger premiums, like on an Apple or an Amazon or a Google or something along those lines?
well, your max loss is always going to be the difference between the strikes.
So that differential is really key. On this stock, you can do it for a couple of bucks. On an Amazon or an Apple, you might do $5 or $10, and then of course the risk would be bigger.
That's it.
Gotcha.
That's it, right?
Dean, are you always trying to get off 2 to 1?
Well, that's the definition of a back ratio call spread, right? And
Right, but I mean, I'm sorry, 2 to 1 out of scratch.
as a reward to risk
Yeah.
position,
No, no,
yeah,
no, no. You got a penny for the trade or a buck, whatever you want to look at it. A lot of times the math doesn't work to where you can't get two up. You have to pay up. You have to pay premium for the long calls. And so that's what I'm asking. Do you try to scratch out on your premiums? In other words, does the cost does the selling the call finance the two puts? Probably the two calls.
what it does is the one short you're selling buys one of the longs, and the other long is for free.
Gotcha.
That's what you're trying to get to,
Yeah.
right? Because sitting there with a long call option for free is a good deal.
Yeah.
Yeah.
Dave, one of the things I did last week, I think might be more of your alley. It's on Datadog, DDOG, and it's similar to the ones I showed you tonight that had not broken out, but I had anticipated it might. And it broke out here, and it's up
Yeah.
again in the aftermarket here, and it's got a pretty good amount of room. And it's, these stocks that I just mentioned, they're in the tech sector, but they're part of the tech sector that hadn't gone up already. And I was just wondering if there's a group of stocks that, went way down in April, have come up somewhat, but because the other ones have already gone up, maybe they're going to get a rotation. And so,
If we got time, I gotta tell a story.
sure.
So, we talked before about, stocks that are defying gravity, right? Well,
Yeah.
there's a flip side to that, and that was actually scanning I did, at the bottom after, the tariff stuff, right? And the question I asked myself was, who got beaten down that shouldn't have, right? And did some scans for that. And the top one that came out of that was Microsoft.
Uh-huh. Uh-huh.
It's like, Microsoft isn't getting hurt by tariffs, right?
No.
And so we took that long, and isn't it fun to be right?
Yeah. Well, the other thing is, when some of these big monster companies go on sale, first of all, it's infrequent. And then the likelihood they're going to stay on sale is not very great. So that's,
It's really interesting
yeah,
that
yeah,
Dave, you like these mature trends, going above 52-week highs.
yeah.
I like to.
Well, I like those, but also like when the market's making a transition. For instance, I got short. What did we short? We shorted, I think, JBL, and that was the pattern I call a bow tie, where you have the three moving averages come together, and that was it's going straight up since. But you could see that if this stock kind of it failed like at a double top, it began to implode. and then it had a retrace. And so we sold it on that retrace back up to the 30, and we made nice profits and trailed out. And then, with shorts, you're not going to get rich on the short side, at least I'm not going to, I haven't gotten rich yet on the short side. I don't know about you guys. But you can ride the trend for a while and then they tend to shake you out. But JBL was one that we shorted that worked out fairly well. So I will trade the trend transitions off of major highs and major lows. I
Yeah.
don't tend to trade in the middle, and I could see I'm kind of with you guys. I understand at least that trading in the middle works for the option because you're looking for that break to happen.
Yeah.
Whereas I'm looking for longer term established trends. If we begin
Yeah.
to roll over again, then I'm looking for the rollover. I have transitional patterns for that.
I start getting
That
worried.
JBL gave you a transition to the downside in February, and then a transition to the upside in April, and both of them were good for 50 or $100 almost.
Yeah, now the upside transition, I actually didn't play that because I don't like to. I like to see a major low before I play transitions. Now, maybe I'm being a little too picky in my stock selections, but that's something that I like to do. I like to see a multi-year low before I'm going to go in and play a transition, or at least a multi-year high or all-time high, ideally, and before you play a transition. The reason I like the all-time high is because everybody is happy at that all-time high. And when the stock begins to crack, then obviously people are faced with some tough decisions. And people don't tend to sell on the way down. They tend to sell on the way back up unless they get into a lot of pain. So you'll get these retrace back up, such as like JBL up to that 30 EMA. And then when it begins to fall, it begins to a lot of times drop in earnest. So those transitions, all-time highs, ideally in stocks, and major lows, at least 2 or 3 year lows for the long side. So I kind of leave the middle alone. And I hear you, Jim. I think you kind of open my eyes or something. Maybe that's the breakout characteristic. You're not trying to catch a 5 year trend or something. You're just trying to get a pop on your option premium, and I get that.
Yeah, I
Yeah,
mean, that's
for
how
me,
they go from one or two. That's how they go from $1 or $2 or $3 up to 15. Because they go up and fill a gap, and everyone who has either been on the sideline or on the other side quits, and then you have an order imbalance, and then the market maker is the only guy down on the other side of the trade, so he moves it to that price that's way away from the moving averages to fill all the orders. So that's the kind of thing that we're looking for. But that's in a certain type of trading, and like I say, everyone's got their own thing.
Yeah.
Since we're coming up fairly close to the end, I just think you guys should have time right now to kind of explain exactly what you're doing to help investors. I'm going to start with Dean. And Dean, you've got a lot of ways that you help people, and I think I'd like you to spend some time explaining how that is.
Yeah, so I'm a swing trader, my time frame for a swing trade is 1 to 3 weeks. So I'm just trying to catch, you know, a part of a bigger trend, a fairly dramatic move in the beginning or middle of a trend. And when I see like this Microsoft is going up, and on my price oscillator, I see this bearish divergence, it tells me that momentum is slowing down, and that that's not my sweet spot. I'm trying to catch these early, new trends, right? And so, I have a live trading room. I send alerts. I do daily charts, stocks, options, ETFs. Stocks and ETFs, primarily play the options on them, right? And we do some education. An overall trading system focused on risk management, some simple indicators and chart analysis. And the best way to kind of put a toe in the water and follow is with the Substack. I know David put the link up earlier, but we do a weekly or bi-weekly if there's something's going on, market analysis, offer some trade ideas, and we also then push out invitations to educational events, guest pass to our trading room, stuff like that. So a great way to come check it out. So they're
And in the trading room, is everyone kind of sharing their own ideas too? So it's a real, dynamic situation.
Oh, yeah, what we do is we have a running watch list of candidates and there's I should have had a graphic. You can just picture a funnel with different levels, and things come into the funnel as, yeah, that's an interesting idea. We should keep an eye on, and then, oh, that's getting better, and here's the final criteria, and then, oh, it triggered, and we manage the trade, and then I have some scanning tools and techniques. Started using AI. We always look back at our trusted friends, right? About 10 stocks that we've traded frequently. Keep an eye on those. And then the participants come in and go, hey, what do you think of this? What do you think of that? And it's like, oh, nice, right? And we'll put that on the list as well and offer, just kind of like the Analyze Your Trade show that David hosts.
Yeah,
So,
yeah, same kind of an idea.
yeah.
That's good stuff for sure. Dave, you want to explain a little bit about, some of your methodology? I use the same thing you do. I don't call it the bow tie thing, but I really like that idea of when these moving averages get together, because the way explain it to people is there are three different time frames I'm looking at.
Yeah.
Sometimes I'm looking at five different time frames, and if they all come into the same price, that's extremely weird, and weird doesn't last.
Yeah.
So
Yeah.
you're that bow tie thing, you've had success with that, haven't you?
Oh yeah, for sure, absolutely. That's a
Yeah.
really good way to catch the market transitions. The overall market itself. Pay attention to the daily bow ties. Pay attention to the weekly bow ties, and that'll
Yeah.
help to keep you on the right side of the market. The other thing I use with that is proper order. So if that 10 is greater than 20 and 20 is greater than 30, it's kind of like the Landry light indicator I was talking about earlier. It just helps to keep you on the right side of the market. As
Hmm.
far as what I offer is I have some trading. I have a monthly membership which allows you access to trading courses and more in unlock over time. I also have, as part of that, a Facebook group where we do talk about trading ideas, and some of the guys have really taken my stuff and really done well with it, and they're putting out ideas too, which is really 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 nice. On top of that, I do a daily trading service where I put out specific recommendations, and I also give a watch list, what I call the Landry list, for people who might be interested in some ancillary trades. Like earlier, I took the GE trade as what I call a Russian doll, where you have a daily setup and you go in for an intraday move. But I'll actually recommend specific stocks with an entry, a stop, and then an initial profit target. Once that initial profit target is hit, like I've said earlier, we bring that stop up to break even, and then we let it loosen up over time. And that's all that I do that every day, so you can actually see the positions, and there's no guesswork. And I actually have archives of everything going back many many years for people who want to. If you want to learn trading cheaply for free with my methodology, you can go check that out. That's davelandry.com/archives for those, and you can get an idea of my analysis. And there's no hindsight there because obviously it's published every day for the following day. So that's what we do. We have a pretty good Facebook group, if I say so myself, and I've really been enjoying. That's my wife said a while back, and I fully agree. It's probably one of the best things I've ever done. Like Dean said earlier, getting some people together, some ideas, getting more eyes looking at the charts. It I think it's a wonderful thing.
All right, we got a couple of minutes here, and let's talk about something gold and get an idea if you guys think that 3,500 might have been the top, and if you think there could be an acceleration to the downside coming. So let's put the chart up and let's get your opinion on the price of gold, because it's down $30 right now. And if it starts breaking under 3,300, I thought it might start losing its legs. Um, and the whole world's long it, so there should be some pretty good acceleration to the downside if it decides to revert to the mean. Any
Yeah.
possibility, Dean, that this is going to revert to the mean?
Uh, it is certainly, put in highs, right? And then started bumping up against them. So in terms of a long, I have zero interest in this.
Right.
You know, zero. I don't see a case for a short yet. I
Yeah.
like, I look for proof, right? And
Hmm.
my favorite proof is um, Dow theory, right? Trend definition. And let's see if I can whip out a pen here real quick if it doesn't. So, a downtrend, right? An uptrend is higher highs, higher lows, right?
Hmm.
That's an uptrend, right? And we've been in one. A downtrend is lower lows, lower highs, lower lows, lower highs, lower lows, right? downtrend has started here, right? Low, lower high, new low. It hasn't happened. So, and we're above the 50, the cloud's green, we're, at the top edge of the cloud, right? So it's worth watching, but it hadn't happened. And until it does, I have zero interest.
If
And
we were
now,
to break under something like 305 or 300, which is really like, pretty much the neighborhood I was thinking, do you think that might turn it down a little bit? Because I agree with you. There's no evidence right now at all. And it could very easily just go up and make new highs for all we know, right?
right. And this is a triple top. It's for sure a double, almost a triple top, right?
Hmm.
If it does break through, then that's quite a bit of energy, right? But for now, it's quite a resistance level, right? And so, in terms of an absolute price level, I have to see both the level and the pattern come
Hmm.
together, right? So I want to see that pattern. So,
We
uh,
are having one tip, and that is the relative strength is reducing with every high,
Yeah.
which would be an indicator of exhaustion. But exhaustion doesn't mean go down, it just means exhaustion. More of like what you're talking about, price making a little lower low with the highs lower low. That would confirm that the exhaustion is going to turn into a downtrend.
and we had this big uptrend, and then the momentum came out, and it dropped a little. Now we have bullish divergence, right? These little peaks get higher, but with no energy. So for me, there's no case either direction on this at this point.
Yeah.
I'm
Dave,
longer,
do you have a
long,
yeah, Dave, do you have a little
yeah,
kick in here? Kick in here?
longer
Yeah.
term, I'm still bullish, and I'm might be talking my position because I still have two gold stocks. I'm waiting for one to hit the IPT, which I hate to use the word hope, and hopefully that'll happen soon. It's just consolidating the net price movement, though. We've gone sideways for quite some time. It just looks like it's catching its breath. I don't want to
Yeah.
confuse issue with facts. It's like it
Yeah.
really should be going up with everything going on in the world. So I guess that's in the back of my head, as I think you alluded to a minute ago, Jim. But
Yeah.
for now,
It's a pause to refresh right now. That's the evidence.
yeah, it's
And
so far. So
I would think it wouldn't be a bad idea to keep your eye open in case that evidence starts turning.
yeah, and I would wait for it to break below the moving averages, and on if you're looking at like the GLD,
Yeah.
a break well below 300 before I'd start getting nervous, maybe even 290. But by the time that happens, you're going to have moving averages coming down, flipping over, and also at that point you're going to have a lot of overhead supply to deal with. So I think for now it's still a longer term trend. We're still above we've been above, believe it or not, the 30 EMA for 22 days. The lows have been greater
Oh,
than
yeah.
that. So
Yeah.
so that tells me that it still has a little oomph to it. And I think Dean kind of alluded to the fact that maybe it's losing some energy was a word he used. I like that word. But I don't know. I'm hoping, I know I just said hope, but I'm hoping that this is the pause that refreshes, as you just said.
Yeah.
But for now, until proven otherwise, now you got to realize my nickname in the industry is trend following moron. I was very
Yeah.
offended when I was first called that, but now I realize maybe I am. So
Yeah, yeah. There's nothing wrong with that. All right. Well, thank you guys for being here tonight. As far as my option professor, we do have a webinar tomorrow. So if you'd like to learn about options and how I operate with options, just send me an email to optionprofessor@gmail.com and I'll send you the link and you'll be all set for tomorrow's seminar. Again, Dean and Dave, always great to talk to you. A lot of stuff going on. We'll be talking again. And right now I'm going to send it back to David Kosmeter.
All right. Thanks, guys. Yeah, excellent discussion today. So just a quick reminder, be sure to subscribe to Timing Research on YouTube, Substack, and your favorite podcast app. Also, you can just go to TimingResearch.com and the recording of this episode will be posted as quickly as possible. Also, you can scroll back and look at the full 10 plus year history of all the events and presentations and everything we've ever hosted on Timing Research for you to review at any time. So I just want to thank my guests again for today. Dave Landry of DaveLandry.com, Dean Jenkins of FollowMeTrades.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
All right,
thank
thank
you.
you.
Thank you, David. Appreciate it.